At iBankerU, we are all about building that stack, primarily as a tail risk hedge against monetary debasement. Gold and silver. We are watching silver particularly closely because it is historically far dislocated from the typical gold to silver ratio of about 15 to 1. We will call 15 to 1 equilibrium. So, where is the gold to silver ratio today? 60 to 1. That's 300% out of equilibrium, which is why we like watching silver so much. So, even though it is a tail risk hedge sitting in a vault along with its big brother gold, it is silver we will be discussing since we believe it is the more compelling bet personally. So without further ado, we will discuss what last week's global silver market did, specifically April 13 to April 17, and what that means for silver the week of April 20th. To value the future, we must learn from the past, and here is what we learned. The week of April 13, silver did not break out. It did something more important. It built a base at higher levels. And it did it globally across Asia, London, and New York. From Monday to Friday, every dip was tested, every rally was sold, and by the end of the week, one thing became clear. Stronger hands are now in control of this market. Let's review. Monday, April 13th, the shakeout. We start the week just as the prior breakout. Silver opens 74 to 74.20, and immediately it gets sold. The price pushes down into 72.80 to 73.20. Across the Shanghai Gold Exchange, volume steady. No panic selling. Physical bids hold. In London, via the LBMA, spreads widen slightly. Sellers show early, but no follow-through, and so on to the CME group and COMEX. Down move on lighter volume, open interest flat to slightly up. So the interpretation, this was not a liquidation. This was a controlled shakeout of weak longs. Now we move on to Tuesday, where we see absorption. Tuesday is where the tone changes. Silver trades sideways, 73.40, 74.10. Looks boring, but it's not. Across all three hubs, elevated volume and minimal price movement, tight spreads. So the key signals at the SGE, they hold slight premiums. LBMA fixed clears without stress. COMEX open interest ticks higher, and what that all means, sellers are being absorbed and quietly by participants willing to hold size, which brings us to Wednesday, where it starts to grind higher. Now the pressure builds. Silver opens 73.80. It begins a controlled climb. 74.50 to 74.80. No spikes, no headlines, just consistent buying across regions. Asia, the bid strengthens slightly. Industrial demand steady. London, offers thin early in the session. Fix slightly skewed to buyers. And COMEX, clustered buying during U.S. hours, larger prints hitting offers, but price stalls below $75. Why? Overhead supply, profit taking from prior longs, options related resistance, and dealer hedging. So the interpretation is the market is compressing, which brings us to Thursday. So now we test the ceiling. Silver trades repeatedly, $74.80 to $75, but can't break cleanly. Across Shanghai Gold Exchange, it's still defending dips. LBMA, thinner offers, but no panic. And CME Group, long positioning remains. So the key weekly trend is emerging. Higher lows are forming, resistance is unchanged, volatility is compressing. And this is a classic coiling structure. So Friday, April 17th, positioning into the close. Friday tells you everything. Silver holds the range, 74 to 74.80. No breakdown, no breakout, but under the surface, open interest remains elevated. No large-scale long liquidation, and physical markets are stable. So the interpretation here is the market is going into next week, which is the week of April 20th, fully positioned and waiting. So the weekly summary by the numbers: the weekly low, 72.80, the weekly high, 74.80, the weekly close, approximately 74.20, only a $2 range. So the structure, higher lows and capped highs. The key stat, price flat to slightly up, open interest up. And that combination is what we call accumulation. So what changed this week? At the start of the week, market was uncertain after prior rally. And by the end of the week, the market stabilized, weak hands were flushed, and strong hands were in control. Across all three major hubs, Shanghai Gold Exchange, consistent demand; London Bullion Market Association, controlled price discovery; CME Group, long positioning building. So this isn't random. This is global alignment. So this week, the week of April 20th, we look forward to the $75 level. This is the line. If the line breaks and holds above 75, momentum funds re-enter, dealer hedging flips positive, path opens towards $77 to $80, and if it fails again, the range continues, the week-longs exit, and we retest the $73 zone. So dollar and rates. Silver is highly sensitive to the US dollar direction and real yields. So watch for dollar weakness, that'd be bullish, and yield spikes, that would be bearish. So physical demand in Asia, the Shanghai Gold Exchange remains critical. If premiums expand, physical demand is tightening supply, and it's bullish. If premiums disappear, demand is softening, and it's bearish. So the LBMA auction behavior, on the LBMA watch for imbalanced fixes and multiple price iterations upwards. That would be a signal of strong demand. So COMEX positioning on the CME Group, rising open interest plus rising price is continuation, and falling open interest and falling price would be showing an unwind. So the final line, slow and this week, is it wasn't about breakout, it was about building pressure. Silver is no longer searching for direction, it's deciding how hard the next move will be. So we'll be watching with bated breath to see how the market opens Monday and how it follows. If you find this interesting, we'll do another recap next week. But as always, as we encourage you, with or without minuscule market moves, build that stack. iBankerU. Good day.